Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, September 5th, 2025. S&P 500 currently sitting at 64.66. I'm David Starling. I'm here with Ian McMillan. Another week gone by in the markets. Plenty to highlight. Episode 267 already. What do you want to talk about in this one?
Yeah. 64. Is it 64, 67?
Yeah.
That's where we were last Friday.
Mm-hmm. So nothing happened.
Last Friday, we said that's where we were the Friday before. Is that right? Yeah.
Yep. Same spot. Same spot, different
Actually,
river. The same man never steps in the same river twice.
The last 4 Fridays.
That's a great point, actually, what you're about to say.
The last 4 Fridays, the daily candle has been in this area.
Mm-hmm.
64, 67.
Yeah, weekly close for the week of August 11th was 64.49. Weekly close 64.66 the week after that. Last week 64.60. This week currently sitting at 64.67. So really don't even know why we do this. It's just been a straight line sideways.
NASDAQ pretty much the same. Dow's held up. I think Dow's held up pretty well.
It has. It's held its highs.
Above that 45,000 level. Maybe building out a range. So yeah, broad indices. Not too shabby.
Yeah, considering the seasonal period we're in. August bucked the seasonal trend. On what seasonality you look at for September. Now, September in a post-election year, I guess, isn't too bad, which is what we're in. But historically speaking, if you look at last 20 years of data, September typically weak for broad indices. But there's always plenty of things to talk about underneath the surface. Anything catching your attention that's happening?
Yeah, a few things. Precious metals. Well, gold, silver, copper. Copper's not a precious metal. Let's continue to look pretty well. Look pretty good. Little pockets here and there. Aerospace. I don't know if the aerospace thing is rolling over. We'll see. Some of the higher momentum aerospace stuff getting hit a little bit harder. I think that's probably like a broad momentum thing. Momentum's been a little blow.
A little off.
That's okay.
Mm-hmm. Markets do what they do best. They move up and down. But I think, things like you highlighted before we hopped on here, homebuilders.
Homebuilders, yeah. Homebuilders.
Very fascinating to see that strength. And to your point, gold miners, silver miners looking good.
I don't know if I'm a believer in solar yet. Maybe. I think we talked about solar last week.
It's gotten some airtime in the past few episodes.
Yeah, it's not too bad. China, still kind of waiting on China. See if it's going to do anything. Rare earth metals.
So kind of interesting to see the rotation underneath the surface. Yeah, the broad indices move sideways. It's almost like rotation is the lifeblood of markets, and I know that's something that J.C. Peretz likes to harp on. And I think it's absolutely true that there's times where markets rotate, and now appears to be one of those times, right? We still see breadth holding up fine, whether you're looking at a advanced decline line or you're looking at a bullish percent, or you're just looking at charts, like you're looking at the thousands of charts of individual assets. Things are holding up. Things are holding up just fine, especially from
we got the breakout in gold finally. Mm-hmm. I think that was, markets technically weren't open on Monday, but yeah, Tuesday, big gap higher. So that puts physical gold futures above the 3,500, 35, 30, area, which had been rejected at quite a few times. I mean, April, May, June, July, August, every single month. We've gone up to 3, that 35, 50 area, got rejected, finally broke through. Tuesday continues to look good. Miners broke out a few weeks ago, though. So it's kind of I know we mentioned this, but kind of a clue that market participants thought gold was going to go higher, because gold miners, same look, but early August broke out. I'm using GDX. Definitely one of the strong. I mean, you can put GDX up against a lot of things in the market, and it looks pretty good.
Yeah, it's kind of a sign of health, right? If you can put a sector, an asset, or a certain type of thing up against everything else and the chart looks great, probably a clue. And gold miners and silver miners definitely have that going for them. Wouldn't be surprised to see that continue throughout the year. And one of the places that has been really strong, year to date and even before then, are semiconductors, and that's kind of been a mixed bag. If you look at a more broad measurement like XSD, still doing well, but when something like NVIDIA is larger than basically the rest of semiconductors in SMH, and that's going sideways in a small time frame correction here. SMH,
so your average semiconductor stock doing better than your big.
Yep.
Okay.
I mean,
yeah.
I guess Broadcom doing well. There's plenty of other larger semiconductors doing well. It's just
look at, you got Micron trying to get to 1-year highs.
Mm-hmm.
And you got NVIDIA breaking down to like 6-week lows, 7-week lows. Yeah, so that makes sense that XSD is doing better than SMH.
Yep. The math be mathin'. What other areas have your attention? I know we talked homebuilders,
Biotech. What do we think about biotech? Now, it depends on what you use to look at biotech.
I love that you said that.
There's a few different ETFs out there. I don't know. It's definitely on a good move.
IBB versus S&P.
Yeah, right into a 200-day.
And it's relative 200-day, and it's still 67% drawdown versus the S&P from its peak back in August of 2015. So we're going on a decade here of a drawdown. Is this the start of something? Maybe. If it is, there's time. Like, it's not like you're missing out. But you're right. There's multiple ways to measure it. IBB is not the only one. You could look at XBH. Wait, I don't have that right. What's the other biotech?
BBH?
XHB's home builders. What am I doing? Maybe I'm just so fixated on the home builders, which I find fascinating considering all the negative talk around
lumber prices keep falling off the cliff.
They do.
What do you think about bonds?
Bonds
having a good week. Well, last 2 days.
Oh, I thought you were talking about Barry Bonds. I was going to say he should be in the hall.
Yeah, if you had a ballot, you'd put him in.
I'd put him in.
I'd put him in.
I put Pete
Rose in.
Yeah, Pete Rose would be in.
Yeah,
I'm with you on that.
Thin. Boy, we don't have a lot of MLB, a lot of Hall of Fame talent coming up. Not a lot of people becoming eligible that are going to make it.
Yeah, you and Kevin were talking about that. How they.
Yeah, it's going to get pretty thin because if you go to the website, they list up like who's coming eligible over the next 5 years. They go by year. Next year's not bad, but after that, like 2028, 2020 through 2030, I don't know, man. I don't know if not only are there just like fewer names of people that are eligible, they just are not. There's definitely no there's no first ballot inductees.
Maybe that's when you
Sure.
do it. Maybe that's when you do it. When it gets thin, you bring in Bonds and Rose and put them in.
Wow. Yeah, probably a good marketing play.
Mm-hmm. Well, I mean, if we can get a Taylor Swift, Travis Kelce marketing play, can't we? Can we put Bonds and Rose in the hall?
Yeah, come on.
Get it together.
Something big.
But since you were asking about actual like the asset class bonds, I think pretty decent move out of 20 plus year treasuries today.
Yeah.
And when you look at 30-year treasury yields down to its 200-day pretty aggressively, responding to the 5% level, and 10-year yields below a 200-day, still within a range that goes back to 2023. But man, rates definitely have a look of like maybe going to the bottom part of their range here.
Yeah.
Which would be interesting.
Yeah, 30-year sitting on top of a 200-day. Now it could just be cruising in, right, for a little touch and go.
Mm-hmm. Well, and is it really that easy? Is it really that easy that we're seeing home builders do this and we're seeing rates fall off?
And lumber.
Mm-hmm.
I mean, it would be a nice little, right? I guess, right? That would be, I guess I'm a simpleton when it comes to trying to piece together what the next big theme might be. But yeah, that would make sense.
You're just
if you
saying,
told me home builders would outperform while lumber's going lower and mortgage rates are going lower, I get it.
Yeah, makes some sense there. Has always got to, take each chart at its own merit. If they keep selling off canola, I don't know if that has any ramifications to home builders.
Yeah. Nice trade there from Kevin.
Mm-hmm.
Boy, they tried to shake him out a couple times.
He's strong though. He's got those diamond hands.
Can you believe that? Kevin's going trading canola futures.
I think it'd be hilarious if he held till execution. Then he actually has to deliver 20 metric tons of canola.
He's got 3 acres.
And
Everyone around him he could probably he could ask one of his neighbors.
Better start growing, Kevin. What about small caps?
Oh, I mean, they had a not bad, obviously this whole thing, they probably held up. That's so hard. It's not like it's not like the S&P is really even that bad. They've done well. You can't hate them. Similar look to Biotech. So back to like a relative 200-day, pretty strongly downward sloping relative 200-day. I don't know. I know like regional banks aren't doing anything. I don't know. It's tough.
It's got to take some time to build out. It is interesting to see it respond at a relative level to the S&P. That's important. And, I think it's safe to say that it's the small cap material space that's driving, and that's some of your gold miners.
Gold miners, yeah, for sure.
But there's other things in there, some therapeutics. But yeah, small caps, not too shabby the past month and a half.
No, they haven't been bad at all.
And if you're going to turn the corner, this is what it kind of would look like.
Yeah. Still kind of still a little bit in the boy who cried wolf zone for me.
Okay.
I don't know. We'll see. This is what. Now, if you want to do it, right, so you're just now getting back over a relative 200-day.
Huh?
So, if you want to use that, this would be the time.
Can manage risk with that.
But where's this going to come from, though? Because I don't know if I see it under the surface. It's not.
Yeah, I suppose your point is just that small cap financials are the heaviest weighting.
Yeah.
In small cap. And when you look at what's driving underneath the surface, it's small cap materials, small cap healthcare, small cap
healthcare,
utilities.
Yeah. Which I guess is biotech.
Mm-hmm.
Yeah.
Still has proved itself, but worth looking at. And meanwhile, the top sector continues to produce overall communication services.
Yeah, comm services, financials kind of fell apart, at least today. relative base, not fell apart, but when they're below a 200 day, relative 200 day, they don't look bad. Then you got things like utilities continue to look pretty poor. They're the lowest relative levels since January.
Mm-hmm.
So,
And that doesn't,
that's a win.
yeah, and that doesn't really fit the lower interest rate
I was going to
range.
say, yeah, that's interesting with rates going lower.
So you can basically make up any macro theme you want.
You can. That's why. And they pay people. There are people that go to journalism school and they are paid to write stories to fit what Price is already doing.
Yep.
Just keep that in mind.
Price comes first, news comes second. Wet streets don't cause rain.
Yeah, industrials continue to go lower. I mean, tech's getting kind of a bounce today. Discretionary is not bad. I mean, there's a lot of retail. Kevin had discretionary workbook yesterday. When I went through charts yesterday morning, I haven't been through as many today, but yesterday morning, definitely a lot of retail, apparel, that type of stuff.
Agreed. Boot barn,
Boot barn.
which I've never actually been in one of those. I
know. Kevin said he'd never been to an Ollie's.
haven't been to that either.
You haven't been to an Ollie's bargain outlet?
No.
Do you guys have Big Lots up there?
We've got Big Lots, but they've closed a lot of them. Closed a lot of them around here.
They closed a lot of them in the South, too. One of them, I kid you not, one is now, I was just back in my hometown over the weekend, and one of them is a Spirit Halloween.
I guess we know what time of year it is.
Yep.
Oh, we're losing 90 minutes of daylight up here in Wisconsin in September. I don't know why Kevin had to post that information. Be such a
Well, you're in the
Debbie
southern
guy.
part of the state, so it's only 80 minutes.
Yeah, the southern hemisphere of Wisconsin. Wonder how much you're losing. Winter's coming.
People in Alaska now just starting to get like how many hours a day is it dark in Alaska? It's probably starting to get real dark.
Probably. I'm gonna Google it.
Or I've got it backwards and it's gonna start getting real light.
Man, period of complete darkness in Alaska can last up to 64 days.
Yeah, what time of year is that?
Well, it's gonna be winter. Like when in winter though? It appears that Alaska is a very big state. I don't know if you knew this. Yeah. Fascinating. I don't know if I could do it. I don't know if I could live in Alaska because
no, beautiful place.
Beautiful. Oh, it's otherworldly. Everybody should visit it.
Cold. It's so cold. I can barely do Wisconsin for 5 days.
But I'd be the guy during the other peak light when there's like 24 hours of light mowing my lawn at midnight because that's when I can get it. When I can get it done. My neighbors are trying to sleep and I'm mowing the lawn.
Think about your body. How would you think? I bet it would take like 3 years for your body to adjust. Yeah, so summer there, like there, June, July, I guess is just, yeah, you're just killing time with daylight, just killing time. Probably get a ton of work done.
So we're short Alaskan daylight right now. Definitely coming back in. I don't know how we got off on this diatribe, but
very seasonal trade.
Very seasonal. Well, Polymarket's coming.
Yeah,
right?
We are getting Polymarket.
Polymarket's coming to the US.
Out a way how to. They're gonna have a brokerage arm that you can link, like your RIA can link up to it.
That'd be crazy.
Have a 2% allocation, and JD Vance being the Republican nominee. Although that would be a very good trade at this point.
I mean, he has said he's ready to be president.
Imagine your client seeing those line items on their monthly statement.
Got open wagers on Polymarket about Alaskan salmon and the next president. Yeah, that'd be wild.
And you know that hard-earned money that you spent 60 years obtaining? I put 25 grand of that into
Polymarket
into presidential nominee.
Well, and you know what? If we were to say, right, because I know there is a mantra out there that we're in a bubble. It's not like Polymarket coming to the US would refute that. I mean, the fact that there's enough demand for that type of stuff, I get,
Yeah.
you look back and be like, yeah, I guess that makes sense that we're in a bubble.
I mean, gambling is so, that's a big, I mean, it's just taken the U.S. by storm. I mean, like it's sports betting. So yeah, now we're betting on. I mean, you can bet on anything. You and I could go on there and make. Well, can you? Can you? Can an individual go on and make
Their own market. It's a great question. I don't know the answer to that. A market on Barry Bonds and Pete Rose.
or
I
like
think it-
private betting markets between you and coworkers? Like, oh, is Bobby gonna get put on a pip?
Just all those listening. There's no Bobby that works here.
Yeah, there's no Bobby that works. A client first.
That's right. We're all over the place. Get it together, Ian. What?
I know. Hey, it's definitely Friday.
It is definitely Friday, 4-day week.
What do you
Consolidating
think?
sideways.
What do you think about sentiment? You think it's well? I mean, right? We talk about this. We know we're not in euphoria. Can't be. There's no way we're in euphoria.
Agreed. Because like the fact that you have people saying it's a bubble is not where bubbles are. Bubbles are when no one's talking about a bubble and everybody's making money because everything is going up.
Yeah.
That's a bubble. It goes back to the old adage, is it a bubble because you're not in the market, or are you in the market because it's a bubble? And when you talk about sentiment, the fact that we've had 5 straight weeks of more bears than bulls on AAII surveys, and you still kind of have, I mean, it's not crazy elevated, but the fact that you have an elevated put call ratio out there, and then you've got what the VIX did this week that spiked and has since cooled off.
But then you still have, before I say this, the bullish percent in X's.
Mm-hmm.
It's been there for like a week or so now, maybe a little longer.
And about midfield, right? So it's not like an overextended bullish percent.
Nothing, not even, I mean, 61. So you're definitely not getting like a blow off top type of move, like into 2021, 2020.
Well, and it wasn't that many episodes ago, like mid-July, where we talked about how normal it would be after a move like this to have the market move sideways.
Yeah.
And here we are. The market's moved sideways, digested those gains, and information's coming. And what I mean by that is you get a market that's moved sideways. We call that consolidation as technicians. And you like to see that consolidation confirm the primary trend, which is up. And it's so if we get into, November and these consolidations are, I know it's 2 months, Ian, but if we get in November and the consolidations break down, well, that's information. But for right now, it's just a correction through time, perfectly normal for markets. But it's just interesting that you have top callers out there, bubble callers, more bears than bulls, VIX spikes for premium events going up. I mean, it's, to your point, it's not euphoria. And I'm not even sure if it's optimism. I would call it skepticism.
I agree.
And
definitely very skeptical. We continue to grind higher. I do wonder if September is going to be weird. I know you said last week we didn't really get the August volatility. September also falls into that seasonal bucket. Wonky markets. But then, I mean, today's action isn't great, but we gapped to an all-time high today.
Right.
We'll see where we close. People continue to pile into gold and gold miners. That doesn't, right? That I remember in Q1, it was a risk off. That was a big thing. Oh, look, they're buying gold miners. Risk off. And then we did have a correction. We had the tariff scare. And then stocks rebounded, but they kept buying.
Well, September is
gold
weird.
and gold miners.
September and October was weird from a seasonal standpoint. A lot of times October brings volatility, but also tends to be where the market can bottom going into the strongest 6-month period. And then I think it's also weird that we call it September, October. I mean, sept means 7 and oct means but these are the 9th and 10th months. I'm sure there's some history there on why that is, but it's weird. So you could expect, you're saying there could be more weirdness for the next 2 months. If you call consolidating weirdness, I would call it perfectly normal. Markets are normally abnormal. It's just the way it works. And you know what's not an uptrend?
What?
The dollar.
No.
Worst start to a year since 1986 for the trade weighted dollar, down 10% for the year. You can come up with all sorts of macro things with that. Find that interesting.
And foreign stocks continue to look good.
Yes.
Yeah, dollar, I mean, really now, a couple attempts out of bounds. It's very, very weak. Dixie's sitting at 97. And again, then you hear this stuff, and I guess maybe, lower rates are good for small caps, weaker dollars good for small caps. The rates, there's correlation between rates and the dollar, yeah?
Mm-hmm.
Okay. In
Well,
theory, there's correlation between anything, but
right.
yeah.
In and out of correlation. You can make the data say whatever you want. Goes back to that narrative.
Well, what narrative do I want to express today, Dave? And then we'll use that.
Right. I got some advertising to sell you, a newspaper to sell. Well, I don't know if anybody reads newspapers anymore, but CNBC's got to sell something. So
Isn't that kind of a shame? Like, I have fond memories of my dad reading the newspaper at the kitchen table. My kids won't get that.
I remember running out to the driveway just to find out what happened in the baseball game the night before.
Yeah. Reading the box scores.
Yep.
Yeah, I always got he always slid me over the sports section.
Yep. Got to see what Kirby Puckett's up to. Those are the days, man. Shoot, I've been in a fantasy football league long enough that I remember our first years, all the data by the commissioner was gathered in a newspaper. PPR wasn't a thing back then because you don't need to tally all the receptions. It's crazy.
Crazy.
Well,
you doing fantasy this year?
I am. I'm in my league that I've been in for 25 years.
You ever won it?
Nope. 25 years. It's like the Vikings. Never won it.
Don't tell your wife that.
Oh, she knows. We share everything, Ian, even our shortcomings. But she has stopped asking.
Maybe you should let her draft for you.
Maybe I should. Maybe I should. Last year I let my son draft for me. Didn't work out.
No.
Trying anything. Well, speaking of selling advertising, I should highlight the supporter of this podcast, the Adaptive Select ETF, listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. We appreciate their support. Ian, anything else you want to cover?
I don't. Good luck to everyone's football teams this weekend.
Yeah. Your Chiefs play Sunday?
Tonight.
Oh, my.
Yep.
Amazing. They going back? They going back to the bowl?
Yeah, probably. I don't know. We'll see.
Okay.
Sure. They're
They got to pick up the slack for the Braves.
Let's not even go there.
Although the Braves did take one from the Cubs, which I appreciate, so thank you.
Yeah. Cubs are in second place in the Central, right?
Yep.
Yeah.
Let's keep it that way. Well, Ian, I appreciate you doing this with me. Always a good time. I know this particular episode went all over the place, but that's okay. Not a lot of change over the last 4 weeks, but I think you highlighted some really important things, whether it's gold miners, what we're seeing out of semiconductors, communication services, international sentiment. I think we covered a lot of good things this week, and we hope our listeners appreciate our candor and insight. And if you do, please share it with your friends and give us a high ranking on your platform of choice.
Have a great weekend, everyone.